Hi, and a very warm welcome to all our viewers for yet another episode of Beyond Boundaries Market Trap for the week that ended today, October uh, the 10th. Just wanted to reconfirm and be right on the date. Anyway, it was a wonderful week for the markets and for the silver as well. So these are the two hot topics for the last couple of weeks that we have been discussing, more on the Indian markets. So a very positive week and a broad market rally is what we saw. So we have with us Mr. Prabhanjan to talk more about the market dynamics for the week that went by and also for the next 1 week to 10 days as to how we have to place our bets both on the international markets, the commodities as well as the Indian markets, and what is that we are seeing from the fundamental side, any shift that is happening on the Indian markets, and make the right investment choice. So thank you, Prabhanjan. A very warm welcome. And how did you feel the week was that closed today?
Good evening, Ashwin, and good evening, all stock market enthusiasts. Market have done their drama. Bitcoin's out of breath, as you know, and your portfolio deserves a little bit R&R.
Yeah.
Now it's time to relax before the next bull run. So that's what I feel for the market that passed by, the week that passed by. So on like if can I continue on the global parameters?
Absolutely, you can talk both about the global and the domestic factors,
Sure.
the fundamental factors. Then I'll probably take the domestic technical factors, and of course, we'll also quickly have a talk about silver and the commodities that have been the flavor of the season.
Absolutely, absolutely. Great. Thanks, Ashwin, for that. So, on the main parameters, let's talk about crude. It was more or less on the same lines. It was pretty stable. In fact, it has come down on Brent crude, a couple of dollars down, which is around 64, 65 levels, which was about 66 levels in the last week. The dollar index, which is worth mentioning, due to this high drama that is happening at the US shutdown and other things. The US dollar index has increased to spike to 99.4 levels. It was pretty around 97, 98 levels in the last week, but this week it has spiked to 99 levels. And rupee, it's on the same levels. It has not appreciated or depreciated, but it's showing the same stability around 88.7 levels. India VIX, again, the same stability around 10. Bitcoin, as I said, is it has gone out of breath for some time in a short period of in the short run. So on October 3rd, we have seen a Bitcoin which has surged to a 2-month high, trading at 123,000 USD approximately, and making a significant rebound from the recent lows. And this week it settled around 121 levels. So coming to the global markets, what has been the flavor is US equities extended their upward march with all the three major indices S&P 500, Nasdaq, and Dow Jones closing at or near record highs. The S&P 500 gained 1.1% for the week, making it sixth consecutive weekly advance. And a potential and optimism around Fed rate cut in October continue to drive the sentiments. To talk about the global equity funds, which has attracted a solid inflow of about 44.6 billion USD, the second largest weekly addition in 2025, underscoring the renewed investor risk appetite. Uh, on the bond funds also saw moderate inflows of about 5.8 billion as markets continue balancing the yield capture with the rate risk, while money market funds registered another USD about 9 million in net inflows, showing investors are still hedging in the short term uncertainty. In the emerging markets, equity funds witnessed a modest outflow of USD 312 million, while bond funds saw a net inflow of about 408 million. Particularly, it has not come to India per se, but it has gone to the other emerging markets. To talk about India, domestic markets ended on a positive note, as Ashwin rightly mentioned. Sensex gained about 329 points on Friday, led by banks, realty, and consumer names, while IT and metals they were little, dragging the markets. Um, what were the key driver points is for the US markets to outperform? Is US, there has been
Ranjan, sorry, I would like to interrupt you here. I'm so
sure,
sorry,
sure,
I'd like to interrupt you here.
sure.
One concern that a lot of us are having is related to the IT sector. I mean, it has been largely underperforming. What do you tell those investors who are heavyweight on IT sector, especially those big names? I mean, what do you have to tell them? I mean, do they continue to hold? Do they go underweight? Do they shift into something else? What is it that you would look at as a portfolio manager?
So at Elysian, what we have been advising our clients is, we are never overweight on any of the big IT names. Because they are all the white elephants, and on what we have seen is they lack some sort of innovation. We always are under overweight on the mid IT names, and also these digitally tech driven IT. Those are the things which are which will drive the market. Maybe those IT names which are insurance linked. Maybe these IT names which are e-commerce based linked. So those are the stocks where we have been very heavyweight on those things. And of course, there are certain select uh, mid caps in the IT which we are overweight. On the heavyweights, Nifty 50 heavyweights, we are relatively underweight on those things. So I mean, unless they look into any of these AI driven things, or they look into big acquisitions instead of buyback. We have seen a lot of big IT names like they're doing a buyback. Instead of buyback, go and acquire and change the horizon of how Indian IT works, right? So that is where we see a lot of value. Unless such thing happens, we don't see any big moves coming in the on the big names in the IT sector. So I mean, on
That's
the
interesting. No, I'm glad that you touched upon that point because ever since 2022, IT has been laggard. Somewhere that AI, it is now like the word organic. AI has become a brand in itself, and people are thinking
right,
that this is going to be the next innovation that is going to happen. But it's just that frustration is kicking in, and IT, there are one or two stocks that are outperforming the sector,
right,
no doubt about it. But largely, IT has been very quiet. So, just to summarize, I think, like you rightly said, keeping IT at bay at this point in time and looking for the flavor of the season rather than sticking to the conventional investing method in being overweight on IT is a good thing to do, and especially dollar is being a concern for the
absolutely,
many of these companies as well.
absolutely. And look
So
at this
sorry,
big tech
you can
AI
please
names.
proceed.
Yeah, yeah. I mean, since we are on
Yeah.
this IT topic, look at this big tech AI and thematic flows in the US versus the inflows within Indian IT. Indian IT of late
Mhm.
has been showing a lackluster performance. But however, you see the AI, semiconductors, and large cap tech once again led performance in US. Sector-specific ETFs saw a record inflows, while with investors betting on continued earnings strength from AI mega caps. The rotation from the defensive to the growth names become more visible, in US. The consumer staples and the
Yeah. Yeah.
utilities lack, while high growth sectors saw renewed participation. But however, there has been
Hmm.
some small, we feel that there is a valuation fatigue, noting that forward PE ratios for the S&P 500 now exceed 22x, leaving limited room for disappointment. So we need to be a little worried and cautious of these IT names even in the US as well. And as you
Okay.
rightly mentioned, a lot of central bank divergence and global policy stance also have a big role in the global scenario these days. If you see the Fed policy tone, it remains cautiously dovish. Several FOMC members
Yeah.
indicated that the next move could be a cut, provided inflation data confirms the downward trend. And the ECB, if we talk about the European Commercial Bank and the Bank of England, they continue to stress vigilance on inflation, but are leaning towards policy flexibility given slowing European growth. See, this is one worth mentioning here. That's where, like I was telling, though the IT and the AI thematic flows have received a major thing in the US, the slowdown in the Europe might impact the growth in the IT sector even in the US. That's where, like we are of the view. And on the China, the People's Bank of China reiterated liquidity support and may expand fiscal coordination to stabilize demand. In India, RBI maintained its repo rate at 5.5%, signaling a wait and watch stance until tariff related risks subside and inflation stabilizes. If we talk about the yield curves, the US yield curve steepened modestly. Mainly, I would attribute this for the drama that is going on now because of the shutdown. It's been a week because of this US shutdown. The US yield curve steepened modestly, with long end rates rising relative to the short term bills. Similarly, if you see the gold has been touching new highs. I would attribute that to
Correct.
this, the weekly shutdown from the US markets because people are moving towards the safe havens and all that. If the Fed cuts in October, emerging markets like India could benefit from the fresh capital inflows provided the currency stability holds, right? So that's been fairly on the global thing. I would always be at Elysian. We always want to have a wait and watch policy because of the Fed cut rates, the inflation, the U.S. government, shutdown. What is the new bill? What is the new limits the government will impose? So these will be having a impact on the flows, and slowing down in the
Yeah.
European markets also will have a bearing on the global sector. And of course, if the global US has an impact, it will have, being the mother of the markets, it will also have an impact on the Indian, domestic
Correct. Correct.
stock markets. And if we see, Ashwin, over the last uh, couple of weeks or so, the RBI has been on the radar. External borrowing, in fact, I did mention in my last week as well. The external borrowing
Yeah.
or ECB or foreign flow reforms has kicked in. The RBI, the government are pushing ahead with reforms to ease external borrowing norms, aiming to improve the credit access and foreign capital inflows. This has been a big boost. Similarly, the second is, there's also a push to simplify the entry norms to these foreign investors, including aligning the
Mhm.
RBI and SEBI registration requirements to reduce the friction and accelerate the foreign investment process. So this is a very long-term, scenario from the government perspective, from the RBI perspective, and from the SEBI perspective. And if
Understood.
you see the credit lending rules, the RBI has tweaked rules for small businesses, which are very, and that's why we see a lot of NBFC stocks running now. Over the last 4 or 5 years, some of the stocks has run more than 30-40%. And the RBI has tweaked rules for small businesses and gold raw material back lending. Banks may now vary the spread, additional interest based
Mm.
on credit profile more flexibly every 3 years for such loans. Co-loan lending rules also have been reinforced, meaning that regulated entities can retain or must retain 10% of each co-lending loan now on their books. So these things have been welcome rules from the RBI. And as I spoke earlier, the RBI has revised down its CPI inflation forecast for 2026 to 2.6% from 3.1%, and raised its GDP growth forecast to 6.8%. It really gives a very good boost, to the entire foreign institutional investors and also the retail investors. When RBI is revising
And
the
do you see
growth
that
forecast.
this will pump up the liquidity?
Absolutely, absolutely, absolutely. That will always buck up the liquidity, provided the Fed cuts the interest rates in October. That
Yes.
has got a direct impact on it. Like if Fed cut rates, and because of the lot of uncertainty that is there in the US, the money will definitely eventually fall in the emerging markets like India. And another important point, in during this week, it's worth talking is the UK India trade and tech push. UK Prime Minister Keir Starmer's visit to India emphasized the ambition to double trade and deepen tech and fintech partnerships. His visit also promoted the UK as India's key partner in finance and innovation. These things also keep the macroeconomic strength. And Europe, I mean, it also helps to boost the investor sentiments. Such visits, such talk on the trade and economics. During the visit, trade deal ambitions were reiterated, with both leaders indicating that the deal is expected to take effect within a year. UK also signaled
Okay.
interest in investing in Indian fintech, which is quite significant move. Fintech, not only fintech, education and creative industries. Example like proposals on the film production. And I am also seeing Ashwin here. Many of the big movies, they are not they are only even till today they are taking money from the producers and other things. And I am seeing here where big production houses also come for the public IPOs. I am seeing that trend. So such things like proposals around the film production from the UK will significantly boost the startups from the film fraternity as well. So that is where
Yeah.
I'm focusing. I'm also pouring my thoughts. And another significant, development in during the last week is the U.S. trade. Indian Prime Minister calling, Mr. Trump to review progress on the trade talks, and Mr. Modi describing the progress as good. No, these things improve the sentiments. And meanwhile, the US is sending high-level envoys, to India on 9 to 14th, October 9 to 14 to further the bilateral dialogues. So these are also to me has improved the sentiments during the last week in the stock market. And we also point out that India's ongoing purchase of Russian oil was brought up during those discussions, and a potential sticking point is that, of course, the trade diplomacy. And before I sign off to you, Ashwin, one important update which we need to see, we need to, I want the investors and all stock market enthusiasts to have a bearing on it. Is like SEBI, it is like working under the carpet, which are very significant. I'll just name out how SEBI is working to improve or strengthening the secondary market and the primary market. One is it has raised the minimum size for the block deals from
Yes.
100 million to 250 million, along with tighter pricing bands and dual session windows, morning plus afternoon. This is intended to reduce the volatility, and improve the transparency in large trades. So we shouldn't ignore the SEBI's involvement in strengthening the stock
Absolutely.
markets. The second
I
is
think
both.
we have as a regulator, we have got extraordinary measures from them. I mean, sometimes we may not like them,
Yes.
but behind the scenes, they are doing a lot of work. We'll have to give them their due credit.
Absolutely, absolutely. And the second most important thing which SEBI is, looking into the derivative and the intraday limits, which has been overhauled. As of 1st October, new rules for derivative was enforced. Intraday net positions caps in index options have been codified. Limits on single stock, derivatives for individual entities have also been introduced. So for example, individual investors capped at 10% of MWPL to control the concentration risk. So these are very pretty important regulations which the regulator is handling, and they strengthen the mid-market sentiments of the stock market. And again, another significant important thing is we keep talking about the family office regulations. They have clarified that media have been speculating. Media speculation has suggested that SEBI might bring family offices under the regulatory ambit. SEBI now publicly refuted these reports, but I feel in some days going to come, these family offices also will be brought under regulation from the
Correct,
regulator
correct.
perspective.
It's only a matter of time.
It's a matter of time, right? And another important thing which they have brought in is on the angel funds. SEBI recently notified that alternative investment funds, which is the second amendment regulation of 2025, which allow more co-investment flexibility with alternative investment funds, especially for category 1 and 2 investors. Separately, the revised regulatory framework for angel funds are also notified. clarifying investor eligibility, disclosure norms, and operational flexibility. Why I feel that this particular move from SEBI on the angel funds under co-investment is significant, because these days, if you see, high net worth individuals are very high net worth individuals. They not only invest in the secondary market, but they are taking these angel fund routes. Unless SEBI, strengthens these rules as an investor friendly, we don't see a significant, money flow within India, and this also helps in stabilizing the currency. So this is like one thing which I always appreciate the market regulators' motive, and also their advert, what do you call it, as uh, coordinative attempt to improve the platform, the stock
Yeah,
market platform. So
correct.
with these things, I always feel that the macroeconomics is absolutely in favor of India. Maybe we may have the micro factors little, like going here and there, but however, uh, till these trade barriers stabilize, till the U.S. stock market, U.S. government opens up again, the shutdown room opens up. So we need to be little even cautious on even on the domestic markets as well. Rupee, still we see a lot of pressure. So unless rupee also stabilizes, we would always have a wait and watch policy for the next 2 weeks per se, for the domestic markets as well, Indian markets as well.
To put it in a very crude way, I was speaking to one of the other trader and investor,
Hmm.
and he was, I mean, very jovially. He said, Ashwin, as they say, cash is king. Indian mutual fund industry is holding so much cash, nothing is going to happen. I mean, in a way, you have to agree to it because we are holding a the mutual fund industry is holding a very, very large sum of cash that can be deployed. And
Right.
I'm pretty sure those fund managers have access to better information or, interpretation of information. Let me correct myself. Interpretation of information, the quant data, everything that they have is much, much superior than what we retail investors have.
Right.
And they are keeping the cash idle to deploy at the right point in time. And I think somewhere, although we should not attempt to time the market, but sometimes getting the better time also adds that additional alpha in your portfolio.
Absolutely.
So I'm also keenly
Absolutely.
watching out for the cash component to come to single digit, and that's when we know the market is pushing higher. With that said,
Absolutely.
I will quickly to move to our favorite two topics. One is silver.
Ashwin, if you
Let me
allow me,
first,
if I can also put one more rumor that is floating around, I'll
yes,
talk much.
please.
I will not take much of the time. There's a lot of rumors that are floating around. Maybe the big hands are stopping the India's growth story. That one of the reason why the stock markets are not going up. Maybe that could be one of the reason. Assuming, like every one of politically, stock market wise, the currency wise, the inflow wise, everything settles down. You see the markets how it will flare. I mean, we are just waiting for that next trigger, next bull run. So I always advise the investors to stay calm. I know, like last 18 months stock markets have, I mean, the portfolios have never given any zero to negative returns, or maybe not more than 5% returns. But I always advise them to hold tight, sit tight, hold right, or hold right and sit tight, and wait for the bull run.
I mean, that's a very valid point that you've added. As advisors, we tend to meet up with the clients frequently, and the one thing that we have noticed is the year to date and especially 1 year return of Nifty has been largely nil to negative or
Right.
just marginally positive, and so is it. So it is reflecting on the portfolio, and I think somewhere I appreciate and I'm happy that it has happened because between 2020, again, I go back to that statement 2020 and 2024, except for that interim pause in 2023, you had markets delivering, I mean, exorbitant returns. It's the
Absolutely.
nature of the markets to average things out, bring the returns to standard deviation. And that is exactly what has happened. And what I'm very glad about it, it has not happened on the back of severe correction. It has happened on the back of a time consolidation, which is
Exactly.
still acceptable.
True.
In that process, you have certain stocks that were overvalued being beaten down by 40-50%. You can't help it. Like you rightly said, if this 15 months of consolidation turns itself into price action once the bull run starts, I mean, I don't want to put a limit to the markets as to where
True,
it will be
true,
headed
true,
to. So
true,
I'm
true.
glad that you brought that point up. And moving to our favorite silver, which is the flavor of the season. Uh, I'll also start by saying that there are a lot of rumors doing the rounds saying that silver is at its lifetime high. Again, it will correct 40, 50%, 60%. I mean, we don't know. The bottom line is none of us know about it. While the we could argue that there is fundamental shift in silver as it was when it was in 1980s or 2011, you could still bring in the argument that it is touching its lifetime high the third time, and there is if history has to repeat itself, it has to correct for 30, 40, 50%. We don't know, but looking at the way the formations are happening, we are still strongly bullish on silver. It is just breaking out. If you talk technically, it is just breaking out, and god knows how much more upside is left. And that is why I want to reiterate the fact that anybody who's just wanting to go and short silver in futures or any other instrument, please please stay away from such attempts. There will be interim corrections. I'm not saying it is just going to blow through the roof and every day it's going to be like a 5-10% move. There is going to be selling pressure. It's at the end of the day, it's all about demand and supply. But from a longer term perspective, I would be more looking to use those corrections to be buying into silver rather than trying to encash on those 2 or 5% fall and trying to short it in future. So more investors are flocking to buy silver. In fact, I just noticed through an article that many of these ETFs which were trading on par with silver prices are now trading at a premium of 10 to 15%. So you know what is the kind of demand silver is having in the international markets also and on the ETF. So investors are just flocking to buy silver, and this flavor will most certainly continue for the coming weeks ahead. Moving to the other instrument, Nifty, I am fairly very clear on this that until these zones are breached, the upline up, trend lines are breached. No matter how much in a strong or a thumping move Nifty might give, I'm okay to pay a premium, but I would only want to go aggressively long once we have a decisive close about this, trend line. And probably around 25,400 or 25,450 is the right level for the markets to show start gaining more strength what it has already got. Right now it is just trying to come out of squeeze itself out of the consolidation that is happening for the last couple of quarters. But once that is broken, it's absolutely fine to pay a 1 to 1.5% premium than it is right now. But once that breakout happens, have your set of stocks ready to jump into, because once the momentum starts gaining on the broader markets, you will see the thrust coming in those stocks which will lead the market. So I would really use this consolidation phase to prepare a list of 10 to 15 stocks, and that when that blow off rally starts happening, just put the money in the stocks that are best, that have the most highest probability to take this market up and ride the rally as long as you can. So the most active that an investor has to be is during the quiet periods of the market, is what we believe. So having said that, uh, as always, please do exercise your fair amount of caution while trading the markets. None of the discussions that happened here constitute any sort of financial advice. Do consult your financial advisor and understand your risk tolerance and your investment time frame and asset allocation before making any investment. So having a very positive close this week, both on the commodities as well as the Indian markets, have given us good breather. And going into the weekend, everybody, I hope everybody will be happy. And historically and psychologically, Diwali has been a good time for the market, 7 out of 10 times. So hoping to have a very good Diwali as well. And we will see you once again next week with more such updates. Until then, stay safe in the markets and manage your risk well in the markets. So thank you, Prabhanjan, for taking the time out. We'll again catch up next week for more such updates.
Thank you, Ashwin. Thank you so much.